Good evening, everybody. Good morning, good afternoon, wherever you are joining us from. Thank you for joining us today and sharing the next hour and a half with us and our panelists. We are very excited to have David Orban and Willem van der Post join Scott for a Q&A on everything that is the future, where it's going, what we need to be watching, cryptocurrency, property, exponential technology, you name it, we're going to have them answering your questions. So thank you for spending this time with us. As always, I'm going to be monitoring the chat box and the Q&A, so please pop any questions that you have or comments as we go along. Our panelists will be happy to answer any of those. And for a start, just let us know where you're joining us from. We've had an overwhelming response to this webinar. It is the 7th webinar in our series, and we really have had over 700 people join us for tonight. So we'd love to know where all of you are joining us from and where you're signing in. With that, I am going to hand over to Scott, but please, I reiterate, this is an interactive session. We want to make it as personal as possible. So please just chime in as and when you like. Hi, Scott.
Awesome. Lee, thank you very much, and really appreciate you setting this up. I do just want to say before we go any further, it's been 7 webinars in a row, and we've run the session over the last, well, nearly 2 months now. And Lee, I just wanted to say to you and your team, thank you for all the value that you've shared. And really tonight is the culmination of those conversations. You know, this is about the future, and there's a great book actually at the moment, which I read recently called The Future is Coming Faster Than You Think, by Peter Diamandis and Stephen Kotler. And for me, you know, I thought, well, it's a great title. If we look at it, and just to show you what I'm talking about here, this is really what Lee and the team have put together. You know, we started with the very first webinar, what are the similarities from 2000 to 2020, and what did all the major players do 20 years ago that we can copy 20 years later? We then moved over to Willem around an EXO business. So again, the whole reason I'm just showing these right up front is that at no point is the intention to go back and go deep into any of these. You can go and get the recordings and watch these. We then went into the 8 technology trends and societal trends that are intersecting to create a generational opportunity in the next decade. We then went to Ray Dalio and the changing world order, and really how, from an economics perspective, there are some very interesting long-term patterns that you need to be aware of. We then had Prof. Aruli talking about location is no longer the most important property factor and what it is all about, technology and data. And then finally, we went into Society 5.0, Entrepreneur 5.0, Investor 5.0, Wealth 5.0, and I even chucked one in for free, which was Property 5.0. And tonight, I'm very, very excited that we're now going into a panel conversation. We've got 2 people who I've had the privilege of knowing for a number of years. Funny enough, I met both of them in the same year, which was 2017. And David, to start off with, is an expert in exponential technologies, decentralized networks, and blockchain. He's a faculty member and advisor to Singularity University, which is one of the top exponential universities in the world. He's an investor, speaker, entrepreneur, author, and thought leader in the global technology landscape. He's also a founder of the managing partner of Network Society Ventures, a global investment firm focused on innovative ventures at the intersection of exponential technologies and decentralized network. The one that I do find interesting always is an early adopter of blockchain technologies and an active Bitcoin investor since 2010. He was the first person to own Ether during the Ethereum launch in 2014. He's advised and invested in many companies and funds related to Bitcoin and blockchain. And that's quite a mouthful, but I think we can safely say that, as I understand it, David, you're based between New York and Italy. This year, probably more so than anyone else that I know. You're talking to 3 people, being Willem, David, and myself, that have spent probably the most time on an airplane versus, you know, everyone else I know. And this year, we probably all 3 of us been in the least travel we've ever been in. So when I say Italy and New York, it's probably more Italy for 2020, quite frankly. But coming live from Italy, David.
My wife came to me a few days ago and asked, so when are you starting to travel again? And yes, definitely my carbon budget is all available for next year to travel twice as much because I actually traveled 0.
No, I hear you on that. And I'm quite new to wearing glasses, and I played squash earlier, and I have a fog over my glasses. So clearly I need to learn how to use glasses better. And I'm going to pivot to Willem. Willem is a chartered accountant, was one of the youngest partners at Deloitte. He spent the first stage of his partnership in financial services, and thereafter as a managing partner of Deloitte's Center for the Edge, an exponential technology and innovation unit focused on discovering new business models and commercial opportunities. He was involved in early stage thinking of reusing space rockets, orbital flight, and actually brought Singularity University to South Africa. So you guys have quite a correlation there. And since leaving Deloitte's founded a technology venture firm that invests in exponential organizations. So Willem, equally awesome to have you. And from your perspective, I think coming live from Johannesburg.
Scott, that's right. I too am carbon constrained. Lockdown was a very interesting time. I'm sure we're going to touch on it tonight. And can I just say what an honor it is to be a part of this panel, specifically with a guy like David. I met David close to the border in the north side of South Africa. I'd come into the conversation about 2 gin and tonics strong. And at the time, David was discussing where to host convergence parties as regards digital consciousness uploads. And it was just absolutely mind-blowing to listen to this guy. And so what an honor tonight to be a part of a panel on which David is. So thanks very much for having me, and nice to see everyone.
Awesome. And the story, the backdata of that story is David kindly came out. David's actually an investor in our organization, and he actually came out in 2018. And we took him around and we did a number of events, and the condition was that we took him to a Big 5 game reserve. So we were at a Big 5 game reserve with his wife, and I actually had my son there, and Willem and Hilda very kindly came and joined us for an evening. So that's the context. One of the most amazing game reserves I've been to as well. We saw a lot of games, so it was wonderful. So I just want to give a little bit of context, and we're going to be talking tonight about Wealth 5.0. And what I'll be sharing with you right at the end is that the world has changed. We've said it's been changing for the best part of 18 months. In fact, if you've listened to anything that David, Willem, or even I've been speaking about for years, we knew this was coming, and COVID just has really accelerated it. And in the Wealth 5.0 framework, purpose is the most important thing. Your creativity, which ultimately is going to determine your value creation, your high touch. How many people can you have a personal impact on? Your high tech, how can you use these technologies to really escalate and grow a business and solve more people's problems? And then finally, your digital footprint, and it's about problem solving and future proofing. If you look back 20 years ago when we had a massive shift with the advent of the whole of the internet coming online, these are 4 companies that made significant progress in terms of value. And if you look at it, Amazon, if you invested $10,000, it's over $274 million today. Alibaba, $108 million. Elon Musk, $40 million. And Naspers, $55 million. And I'm going to share a story with you later about Salesforce. There was another company, but the one that did it differently. And then finally, I'll share with people an opportunity if you're interested, and this won't be for everyone, but it's when the Q&A will be over, on how you can actually invest in the company and platform, how you can receive discounts of 3 to 25% off the valuation, how you can also receive income. So, in these type of times, it's really important to receive an income, and how you can protect your capital. And I think really the purpose of this entire webinar is that a good hockey player plays to where the puck is. A great hockey player plays to where it's actually going. And I'm going to be sharing with you a meta marketplace, a evolution of technology, of business, of investing, of property, and where the world is actually going. And we tend to joke with people, it's the Amazon of personal wealth. And if you're interested in that, stay later. So I want to go into the very first question. And this was actually, we did an entire webinar about this. And David, I'd like to ask yourself, if you look at what's happened, some of the media reports that are here, there's been massive value creation happened in the last 6 to, or even in this year, basically. But they've all been technology businesses. What has happened, and why has it happened? And why has this been this explosion of value that has taken place in 2020?
So the uncertainty that has really impacted a lot of businesses is at the same time an opportunity, because those people that can measure and leverage or even arbitrage risk can take advantage of information asymmetries that put others at a disadvantage. I believe that the great benefit of anyone participating in this webinar is to be able to act on the information that is provided to them in order to overcome these informational asymmetries eventually. Now, the reason why the companies that you listed, and some others, of course, benefited during these times is manifold. One, because their business model was compatible with the global lockdowns that constrained many businesses to stop, but others could keep operating. Another is that they are platforms and marketplaces where the facilitating of the communication and the transactions between people that desire and even more strongly want to conduct business during these critical times is enabled. And many other circumstances that have been certainly brewing in previous years have now matured and have been expressed not only in the concrete results that these companies quarter after quarter have expressed, but also in investors' expectations that the positions that they have acquired are going to stay. Country after country, if you look at e-commerce penetration, this has obviously exploded during the past several months, and the behaviors that millions of people have adopted are not going to then retrench in past patterns. So the shift that has happened is likely to be permanent.
No, awesome. Thank you, David. And just for the record, you know, I've been going through all these different websites, and I'm purposely just bouncing through them. If you've been on all the previous webinars, we've actually shared the slides. Lee has kindly shared the slides, and all the links have been there. And I'm just bouncing through it. So while people are talking, but I wanted to pivot quickly to this one here, Willem, and from your perspective, and both of you play in the same game. I'm going to call it the venture capital, venture building space. But what is happening with this IPO market in America specifically, where they've had some of the, you know, it's been a bumper year in 2020. Why are so many businesses trying to IPO this year when they actually stayed private for so long, for so many years? Sorry, you're muted, Willem.
So I always laugh at Oaks when they do that. Now I'm the guy doing it.
Only according to Google, you know, when it's like you have the word of the year that is most spoken, and this year it'll be you're muted.
Yeah, you're mute. Scott, so I think the IPO uptick is not a single thing. It's a convergence of a series of dynamics and forces that play in the world. I'll start off just by saying that COVID's terrible, and it's done terrible things, both health and financially, to a lot of people on this planet. But with change, there's always opportunity. And it seems to me as if a whole series of digital players have embarked on this era in which there's a heightened need for being able to digitally connect to consumers. And so interestingly, out of those IPOs that you see, you'll notice that there's a hell of a lot of B2C solutions in there as opposed to B2B solutions. And my sense is that amongst other reasons, it's by virtue of this accentuated digital era in which we find ourselves, which, by the way, I don't think is going to go away. And I read somewhere, one of the consulting firms spoke about how this digital era had been fast forwarded between 5 and 8 years. I don't know how you quantify 5 to 8 years in fast forwarding. Like, if you are going to tell me something about the future, tell me something interesting like what the lottery numbers are going to be, right? Something that I can use. But this digital swell, groundswell that's occurring is certainly driving a lot of these IPOs. That's the one thing. I also think that there's a sexiness in technology and an allure and a novelty around it. Earlier stage IPOing is a prominent dynamic that we see at the moment. Companies are not holding on as long as what they had before. So there's a quicker rush to IPO. And I don't think that's because there isn't an abundance of capital in the VC space. I think it's bringing access to those solutions because the founders are typically very purpose-led people. And you see that sort of focus on purpose of organization now way more accentuated than it had been in the past. And a lot of the founders are of the profile of bringing these solutions to broader society, A, in the problem that it solves, but B, also in the participation of providing that solution. And of course, the public offerings of capital allow for that, where typically VC and PE are very private segments of the investor cycle. Those are sort of broad comments that I think if there are specific IPOs that we want to talk about, that'll be fun. But I'd actually, if you don't mind, I'd like to hear what David thinks about this.
Well, I'll pivot to David now, because both of you come from Singularity University, and where I first learned about an EXO, exponential organization, was through Singularity University. And David, I'm fascinated in your take on the IPO space. And then to both of you, my question would be, if you look at any of these businesses, those that are really accelerating and outperforming other businesses, it's because they fit in with this model. But let's go to the IPO space, the IPO question, David, first.
So the cycles of capital formation are overlapping in many different ways. On one hand, after the implementation in the United States of Sarbanes-Oxley, a framework legislation that was supposed to prevent certain pathological behaviors that generated bankruptcies like Enron in the 90s, the cost of going public and running a public company has become considerable. Also, directors became criminally liable for their behavior, even privately. Which wasn't the case before. There would be a more robust shield that the company could extend towards directors. And so for a long time, companies would ask themselves, is it worth it? And would conclude that it was not. There was a steady decline of the number of IPOs in the past 2 decades. At the same time, the value of the ability of executing ideas has increased tremendously. Both mergers and acquisitions by well-capitalized public companies in the technology sector have increased, where before an IPO could happen, they would go and acquire companies, but even more deeply back in the chain of value creation, the so-called acqui-hires, where someone is so desperate to stay competitive and find talent that otherwise cannot be found, they are ready to pay a tremendous multiple and then throw away the startup and the projects and the code, everything, and just to keep the people that they put to do something completely separate. This was especially visible around areas like artificial intelligence, or even more specifically self-driving cars, where quite famously an online learning unicorn founded by Sebastian Thrun, one of the original people behind X, formerly Google X, the laboratory for big bets at Google, now Alphabet. Udacity is now a unicorn, and it teaches you online skills. So Sebastian went and looked what was the price premium for acqui-hires in self-driving car teams, and turns out that the price of acquiring those companies, actually the people, is about $15 million per person, including the receptionist, right? So then he goes to tell you, by the way, if you want to learn how to develop and design and program self-driving cars, you can sign up to this online course. This is incredible leverage of knowledge and ability to execute. So I don't have a specific insight of why a certain number of companies have decided to go public in 2020 rather than 2019 or 2021, but it is absolutely time to reevaluate how the trajectory of company growth can be furthered, not through M&As, with increasing to even larger scales the existing large companies, but to come up with new ones. I do believe in a variety of solutions that are much better in providing resilience than not, oligopolies, let alone monopolies.
Willem, from your perspective, this, and again, you've done a whole webinar on this, so I'm not going to ask you to go into it in detail. But this whole concept of the EXO, when did you first come across it? And when you looked at Center for the Edge, I mean, you were dealing with big corporates. You come from an accountancy background, and yet you noticed a pattern, and it was a pattern that you're now using as an investor in your own companies, etc. Talk to us just a little bit about why these models, and both of you have come from Singularity University where these models were first understood. Why does this provide people with a framework upon which to not only build a successful company, but also to see which ones are going to have a higher impact over others?
I'm not on mute. Okay, Scott, so the first time I saw EXO, I was actually introduced to it by another Singularity faculty member, Salim Ismail. And so I think it was 2014, he did research around these enterprises that head and shoulders stood above their compatriots in a vertical. And it didn't matter what you measured, whether it was dividend growth, cost reduction, revenue growth, whatever you measured, these companies would be outperforming the others in the industry. And so obviously, if you can figure out what constitutes that success, you can bottle it and you can sell it. And essentially, he did that. He interviewed and analyzed these enterprises for a long time and came up with this EXO framework. So my first time in being introduced to this was probably early 2015, just after the book had launched. And then I spent quite a bit of time with Salim, amongst other places in Amsterdam, where we were trying to figure out how to take this to market. Because the old consulting trick was to scare CEOs and C-suites with impeding change and then sell them SAP. Not really a sustainable model in the long term, but there seemed to me that there was a lot of value that sat below this. And in having these conversations, we figured out that there were two main application spaces for EXO frameworks. The first was the transformation of existing, large, typically legacy organizations. Think big mine, big insurance, big bank, big retailer that had gotten big through those oligopolies that David had mentioned, incur debt, buy another competitor, aggregate the results, look really big, pay off the mountain of debt, and hopefully over time return some shareholder value. But is there not a way perhaps to transform from within and reshape yourself in accordance with a framework, which really isn't rocket science if you delve into what those attributes of EXOs are, but certainly unlock major value and growth, both in uplift of revenue as well as decrease of cost in implementing it. So the one arena was big existing companies. The other arena, which is where I play, is on the young companies. Because whilst there isn't politics and there isn't, well, there's always politics if there's a human involved. So whilst there's less politics and less established business practices and the scale isn't quite there yet, you are by nature a much more nimble and malleable type of organization. And if the problem that you're trying to solve is a large enough problem to attract big amounts of capital, and you are able to structure in accordance with a framework that means very little cost as you are increasing on revenue, and specifically technology usage, and the problem that you're solving is big enough, well, that's super exciting. And so in the fund, what I look for is EXO structured organizations. And the first thing we start off with is, what problem are you solving, i.e. what is the purpose of the company? And I'll say this, as a finance guy, out of a big four that was big suit and tie and formal, I always thought that the purpose stuff was soft. If I'm perfectly honest, when I first listened to Salim talk, he's a very enigmatic speaker, and so he draws you in. That allure was certainly there. But I listened to this and I thought, this is an HR issue. Purpose is like the mission statement and the slogan that goes on the financials. I actually, if I'm brutally honest, I kind of laughed it off until I saw the research that spoke about how everyone in the organization is aimed at achieving that purpose. And therefore, as an example, if you look at this chart that you've got up here, you'll notice on the left-hand side, it says autonomy. So that's not 10 committees to sign off an expense claim like the big corporates have. That's, you make the decision. We trust your talent. Every one of us is aware of what the purpose of the organization is. And so we're all intimately aware of the direction that we're running in. Now, just go do it. Let me rather get out of your way as putting more red tape in your way. And as I said, not rocket science, actually super easy because it streamlines decision-making. It makes it faster to react. It gives a more nimble organization, something that can react to market forces a whole lot faster than a multi-billion organization that's got to turn the Titanic. And so I thought, maybe there's something in this purpose. If you, and I can carry on about this, which I won't, but the last thing I'll say is, last year in August, of the top 220 CEOs in the world, 180 of them, I think 181, signed a manifesto that appeals for federal government to relook the definition of an organization or a company inside of their equivalent of the Companies Act, such as to differentiate between organizations that are serving society through a purpose-led organizational structure that also makes profit, and other organizations, typically those that are solely profit-aimed. And the prediction is that in a short space of time for capital markets, you'll find that public capital has to go towards organizations that serve a greater societal purpose, other than just banking as much as possible profit. So this is a real thing, and the world is not laughing this off. They're taking it serious.
Awesome. Thank you, Willem. So I want to pivot to you, David. We've had a very big societal shift, and with the advent of COVID, a lot of companies are now working from home. This is an article here where Facebook, Fujitsu, Google, Microsoft, Netflix, Salesforce, Shopify, Siemens, Slack, Twitter, just to name a few. And it's interesting. I heard some stats, and I can't remember actually if you gave them to me, but I heard some stats where in Silicon Valley and San Francisco specifically, house price sales are up 700% because the average house in America in San Francisco costs 11 times more than anywhere else in America. And so people are like, well, hang on, I can go live in Austin, Texas, and have a much better life, a better house, and everything else. What do you think is happening around, not just, and this is not a property question, this is more a societal shift question around people, moving, living in better places. Where do you see businesses going? And I mean, let's be frank, we've got a person from Neisner, we've got a person from Italy, we've got a person from Johannesburg, we've got a person from Saudi Arabia, running this webinar.
Absolutely. When the internet was born, originally in the 70s, it was a research tool. Then it became a commercial tool in the 90s. But even in the 21st century, we had people skeptical about its benefits or whether we ultimately need it at all. I believe that if they are honest, there are literally millions of people all around the world who are now grateful for the internet to exist and the modern communication tools that allow us to organize, communicate, or even just entertain ourselves while physically isolated. And it would really be a nightmare. I mean, I have a lot of books and I like to read, but if you don't like to read, imagine the past 9-10 months without internet, right? So the businesses in particular have been absolutely blind to the power of organizing their models, the way they engage with clients and suppliers, or even the way they build their teams and they find talent. And they have been extremely conservative, even the best companies, in embracing the freedom and the power that comes with unshackling and really throwing off the arbitrary constraints that they lived under. Now, specifically talking about talent, which I also mentioned before, it is an incredible resource for any business to find the right person, or the person that can even outperform your best expectations for a specific role. And when that happens, it is not only wonderful and uplifting, but it can really make a huge difference for the future of a business. So it will become quite impossible to imagine over the course of the next 5-10 years that up to last year, we would voluntarily restrict ourselves looking for talent among only those that were already living in an arbitrary radius around our HQ, around headquarters, or those that would relocate there. And it will be mind-blowing to believe that was the case, because now that we have experienced the power of looking for talent anywhere they are, and our ability to organize and coordinate and deploy resources with the digital tools we have available, whether we are a CEO or a VP of anything, whether we are a recruiter on one hand, or whether we are a developer, a marketing person, a salesperson, a project manager, a product manager, the number of occupations that can be done remotely is starting to be everything. One of the most wonderful images, and I haven't had the time to check how true it is, but even if it is not completely true yet, it is inspiring for me, was the operator of the excavator of a Chinese mine sitting in his living room and operating the machine remotely. And that is great. You know, I have never worked in a mine, and if you have no alternative, probably you will want to do it. But if you do have an alternative and you can do it, it becomes kind of a video game. It becomes so much better. And we can do even that. So if in a year's time, let's say, hopefully, crossing fingers, everyone is vaccinated, the virus doesn't mutate, we can go back hugging each other. I'm a big hugger. It will be a point where many organizations will say, hey, Mr. or Miss Recruiter, do you mind starting to hire only people around San Francisco once more? And that will be the point where it will be evidently absurd to do that. No one will go back to those practices. So starting to rethink organizations, not only on an optional remote mix, but on a remote first basis is essential, because too many companies still don't realize that power, and they aspire to go back, but they shouldn't aspire to go back, just like they shouldn't hope to stop using email, or they shouldn't hope, oh my God, if e-commerce were not possible, how much better it would be. So the mind shift is going to be important and radical, but we will look back in the previous world and find it primitive.
Now, look, I
Can I
completely.
ask a question of David?
Yeah, go on.
Cool. So on this hugging theme, right? A lot of the time, the politics at play in organizations is what ultimately dictates the C-suite. Let's say it manifests through the CEO, the head boy, the quarterback, the person with whom everyone has great rapport and gels. And that doesn't happen only in meetings. It happens at lunchtime in the canteen, it happens at the coffee station, and it happens at year-end functions. And in this world, where we've had inertia and only looked at those arbitrary circles, that has now been shattered all of a sudden, and the global talent pool is now available, what do you see substitutes or augments that X factor, which happens in the canteen and at the coffee table, to ultimately select the societal leaders, given that we know that organizations have been picking them not necessarily only on merit, but also on social fabric dynamics? How does that change? Because I'm struggling to get my head around that.
Yeah, there will be a lot of changes around it too. The best place to start is the clubbiest of networks of Ivy League universities. So many people are starting to realize that one of the biggest benefits of those universities and colleges has been to start selecting the elites then would be able to rely on each other because they have been binge drinking for 4 years, and that builds a certain level of trust, and hopefully nothing worse, which allows mutual blackmail. And okay, and we have accepted that, and we have thrived in that. And that is one of the reasons why these organizations are now having a hard time justifying the fees that they expect people to pay. Because I listened to a podcast the other day with 2-3 Harvard professors and a couple of their students talking about some very specific, very high quality advanced stuff. But one of the students at the opening remarks quipped, yes, I am XYZ, currently enrolled at Harvard University, the best online university in the world. Because the playing field is level. So there will be a lot of those factors that change. Now, another simple example is totally, if an indicator of corporate social status was how close your cubicle was to the corner office, or what floor of the headquarters you were, and the higher the floor, the more important, Well, those indicators are now unavailable. So there can be two choices. One, let's rebuild them. So for example, AR and VR companies are going to develop digital representations of these indicators. Literally, you will raise your headset and look up on the 30th or 50th floor and admire the power of those living there or working there, even if in VR. And the alternative is to wonder whether our methodology to select the leadership has been that effective. Yes. Are corporate CEOs' performance really good? Is it dependent on their skills? I don't remember the title of the wonderful movie with Eddie Murphy, Changing Places or something like that, where the thesis of the movie is actually a lot of your life trajectory can be attributed to luck. Trading Places is the title of the movie. Check it out if you haven't seen it. Really nice. So we do need to experiment with these alternatives. The reasons are not only economic, but political as well, because the limits of representative democracy, where we literally have dynasties running for office and achieving electoral positions, whether they are the Bushes or the Clintons or whatever the new dynasty is going to be for 2-3 generations, that is a travesty of being a democracy. It is a kind of oligarchic, monarchic process that uses voting to pretend that we have a choice, right? So I strongly support lots of different kinds of alternative selections of leadership opportunities. And if the flattening of interactions allows that, I very welcome. And then, you can still dress nicely on top and have shorts on the bottom. It is perfectly fine. And there you go. Exactly. That's exactly the reason I said that. Shattering our expectations, provoking different reactions. We have to take advantage of that. The revolution of the 60s is far from over. We have so many conventions in our social interactions that if we can demolish, we will just gain incredible freedoms.
Ed, I love that, because my sense is that this measurement of empirical value or empirical measurement of value that you bring to an organization, whether that's through skill or some other attribute that is measurable rather than the politics of social dynamic, is going to cause a huge upheaval in the leadership of a lot of organizations that are prepared to face this, I suppose, uncharted territory of actually measuring for talent and not only playing with political affinity. And my sense is that with something like the Gartner hype cycle, we know that humans have a first initial reaction and then a trough of disillusionment and then a maturity in their thinking. And just driving to work, can you just, if I reflect on myself, I was so happy that I wasn't going to drive in traffic again every day. Gartner hype cycle peak. Then I got lonely at home and I wanted to get out again, trough of disillusionment. And now it's not work from home or work from the office. It's work from anywhere where I find a balance of those attributes that I'm seeking out. But it took a bit of tumultuousness to get me through the first two phases. And with any change, humans have that sort of reaction. And in the change of leadership, my sense is that the peak of this thing is going to be huge, where masses of people will say, finally, the dynasty is broken and we have access to leadership positions. But the trough will be when I think leaders are faced with the notion of potentially being outvoted in a system that they engineered for themselves and suddenly finding themselves bested by someone who's got actually greater skills. And I hate to do this, But my sense was that Trump ushered in that dynasty wake up. I'm not advocating for him or against him. I'm saying, look at the change that the guy brought as a left field curveball, and all those blue-eyed dynasty people in the Democrat society suddenly had to deal with this atomic bomb that wasn't amongst them. So I think we're going to see more of that in different arenas.
So I want to change the tune, and as much as I would love to go down the political avenues, because I'm fascinated on what your thoughts are, I want to. It's been quite interesting. You know, someone sent me this link. It was actually Denise, and I think Denise is online tonight, saying how realistic is $1 million Bitcoin. And you know, this is another slide that I checked now, and it's kind of sitting at around whatever it is, 16,800. I know it went over 17, someone was saying earlier today, and back down and whatever. But I mean, when you consider where we were, you know, down here, which is the same year, just to put it in perspective. Both of you know a lot about cryptocurrency. In fact, I learned a lot from both of you about this. And, you know, David, you and I were part of actually launching that utility token, etc. Talk to us about what your thoughts are on Bitcoin to start off with, and cryptocurrency in general around where we're at. There, someone just said 17,797 as we stand.
So is Bitcoin exchange rate of $1 million absurd? Will it necessarily happen? If we have an asteroid destroying civilization, know that it probably won't. Not impossible, but probably won't. Unless something cataclysmic like that happens, I believe it is almost unavoidable for it to happen. Will it take time? Yes. Every order of magnitude has taken 2-3 years. And so even if the cycles possibly slow down a little bit, it will take another 6, 10, 15 years to get there. But for the moment, as people look at how to justify the value of Bitcoin, what kind of asset base can it really represent, whether its network can be robust and can solve the next challenges that storing an increasing amount of value in the network represents, well, Bitcoin is doing its thing. It has never been hacked. People never lost Bitcoin to robbers unless they mishandled their private key, the password to their Bitcoin wallet. So I can guarantee you that Bitcoin is going to just keep doing its thing. And it doesn't matter how the price is going to go up or maybe go down and then up again and down again. Obviously, the people who are very naive in how they look at that become interested in Bitcoin at the worst possible time, which is now, rather than 6 or 9 months ago, which would have been 500% better. But it is also the best possible time, rather than being interested in Bitcoin by the time it is $100,000, whenever that is going to be. So anyone who hasn't had any exposure to Bitcoin yet, they should please start. Keeping in mind that you don't have to buy an entire Bitcoin, you can buy a fraction of Bitcoin. It is becoming easier and easier, whether it is Coinbase or I actually don't remember what is the name of the local leading South African exchange. You can go on and spend $100 worth of money or $10 worth of money and buy for yourself, give it to your children, and then just wait. And whenever you feel like it, add a little bit, add another $10, add another $100. It is just like that. Now, more broadly, since there is a growing understanding that Bitcoin can play and will keep playing the role of a store of value in terms of an asset class, Ethereum and other cryptocurrencies play different roles that underlie the smart business models that power a world where autonomous machines have an ever larger role. Just like we couldn't imagine being without a credit card today, and booking online with cash is impossible, there will be new business models that cannot run but on the smart contracts supported by Ethereum and equivalent cryptocurrencies, where the transactions can happen rapidly, autonomously, transparently, reliably, and at a granularity that is impossible to imagine. No one would do a 1 cent transaction. But if you do 1 trillion 1 cent transactions, that is still a lot of money. And there will be people who discover the business models where earning maybe 1% of 1 cent on 1 trillion transactions will build a huge company.
Just from your perspective, Willem, I know that you've also been actively involved in the cryptocurrency space. What's your take on the whole Bitcoin thing and where it's at and the other cryptocurrencies?
Scott, the allure of quickly getting rich on crypto, I think, is pulling a lot of people into it without understanding the underlying utility of cryptocurrency. Each of these, typically altcoins, have what used to be called a white paper that sits behind it. In other words, the basic business model of what it's trying to achieve and what it'll be used for. And my sense is that the majority of people have no idea as to what the thing that they bought is being used for, and they're trying to ride the short-term wave of value uplift. And it's an interesting thing. If you were to express your happiness in the price movement on a scale of 1 to 10, you know, when it goes up with $10, you're happy at 8 out of 10. And if it goes down by $1, you're unhappy 20 out of 10. We have these weird amplifications around our emotions, and a lot of those emotional amplifications are driving irrational behavior when it comes to investment decision making. So my thing would be, get a feel for what you're investing in. On the basis of autonomous machines utilizing cryptocurrency with which to foster the transaction set that's underpinning their function, I think that's 100% right. If you look at specifically a coin like IOTA, where the idea is to facilitate micro transactions, think self-driving cars, think the second car in the row is in a rush and it needs the first car in front of it to get out of its way. It'll affect the micro transaction to get this guy to pull over so that you can safely overtake. And that'll cost you 0.047 cents as an argument. That needs to be facilitated by, amongst other technologies, crypto, and in this particular case, IOTA. Now, if you've got IOTA and you don't know that that's what it's going to be used for, then why did you buy it? So my sense is a little bit more self-education and awareness of the use cases will not be harmful. It will enlighten. And then you can make informed decisions as to what you think the price is going to be. Because the allure of it will be $1 million, there's probably 15 people, you know, that listen to that and say, oh, I better buy right now, hoping to get rich out of it. But consider this. If there is a flippening, I'm not saying there will be because I don't know, but if there is a flippening and crypto becomes the mainstream currency as opposed to fiat, what are you going to exchange your $1 million worth of a coin for? Because you're going to be using that coin to transact in every day. You're not going to pull it back into fiat. So where's that rich now? So it's a timing thing. If you're a short-term investor, there's massive upside. If you're a medium-term investor, it becomes a bit blended. If you're a long-term investor, it depends on your philosophy. And you've got to be clear about these things when it comes to matters financial, in my view.
Quick question, and I know there's lots of questions coming up, and I'm conscious of time, and there's so many things that I want to ask as well. Someone asked about MTI, which a lot of people's talking about, where, I'm not sure, David, if you're even aware of it, but I'm sure, Willem, you are, where they're getting quite large returns. And just to be clear, this webinar is for education purposes. This is not financial advice in any way, but I don't know if either of you want to talk to that, and if not, quite happy to say no.
I am outside of the market geographically, and in terms of why and how people talk about this company. I just went to their website. I am sorry to say, but it looks extremely fishy to me. Saying that you get a large return because digital software and artificial intelligence generate consistent returns on Forex markets, it is a classic pitch of a scam. There is no transparency that I could see. There is over-promising of returns. Bitcoin is used as a lure in order to attract people who may not understand what they are doing. And I wish good luck and good health to all the honest people who are working at that company and who invest with that company. I would never do it. I would never give them my money unless, for example, they disclose what their algorithms are doing. What is their track record? Can they backtest what they were doing in the public markets? Foreign exchange is wonderful, for example, for that reason. Is your algorithm able to beat the market? Fine, show me over the course of the last 3 years how it would have performed if I put in $1 million. Lacking that transparency and accountability, there is no reason absolutely to trust it.
I'd like to move to, we, I think we obviously spent a lot of time in the space, David, and, in terms of the whole space around blockchain, and what I'd like to talk about is specifically real estate, but it doesn't have to only be real estate. And the whole balance between a utility token, which is what Willem was talking about, which is the kind of the use case, versus a security token, which is where you've got a cryptocurrency which is using blockchain to invest in a direct asset with intrinsic value. I want to kind of talk to both of you. I mean, Willem, you've already spoken about the Gartner hype cycle, etc. What do you guys both believe about articles like this? Blockchain and commercial real estate, the future is here. Blockchain was set to transform real estate. What happened? So I purposely got one positive and negative. What are your thoughts on where things are going?
Willem, do you want to take it or should I go?
I got two small thoughts on this. Price crash in 2017 didn't do Bitcoin and the perception around crypto any favors by being branded as a bubble. And a lot of people that hadn't read white papers or understood the utility of coins withdrew thinking, Gartner hype cycle. I told you so, bubble. Okay, today it's back. So maybe it wasn't a bubble, and maybe people are now saying, well, this thing has got some staying power, and perhaps there is merit in understanding some of the application hereof. And in there is my second thought. With all the exponential technologies, the one thing that I've seen is that human beings harbor hope, sometimes unrealistically. And so oftentimes the very definitive line that should exist between business case and use case becomes blurred. And you end up at conversations around the barbecue or the braai where people say, things like it will transform the entire real estate thing by 2020. And of course it won't, because there are use cases that could work, but business cases that need to make commercial sense. And the divide between the two is a thin line, but it's a very deep thin line. So if someone comes up with a proper business case, definitely.
I think that what the first waves of crypto anarchists enthusiastic about the utopistic potential of Bitcoin and blockchain underestimated is the power of regulators to jail people. And they did. There were people who went to jail, not because they hurt anyone, not because they were scammers in an abstract point of view, but because they violated securities regulations. And they were either put to jail or they were fined tens of millions of dollars and their businesses were destroyed. Now, I don't have any hesitation to affirm that the enthusiasm with which regulators clamped down on the experimentation that went around 3 years ago in the blockchain space was unjustified. The reason they did that was not to protect the public, but was to protect the incumbent interests of the centralized gatekeepers whose business models would have been and will be ultimately disrupted. But this disruption was preferable to come at a pace that was slowed down so that they could eventually reinvent themselves if they will be able to. I don't think they will be. And we can see that because simultaneously the enthusiasm and the talent and the passion went into different places. The people who feel strongly about what could be done didn't just give up. They kept going at it, and they are still going at it. Whether we call it DeFi, decentralized finance, whether these are the neobanks that are disrupting traditional banks with branches. There is a lot of innovation going on. It is truly unstoppable. So the regulators should really ask themselves if their actions are postponing the unavoidable, and if so, aren't they damaging their home markets really? Because the US is a backwater in so many ways. China is so far ahead. Now, it turns out that political reasons killed the largest IPO that China would have ever had, and financial. Who knows if they will be able to list after smoothing over whatever political feathers they ruffled. But that is a single piece of luck. Other than that, China is far ahead in how they are using digital money and extremely rich platforms like WeChat in ecosystems that we have a hard time even realizing or imagining.
Scott, to that point, I think the world missed an opportunity led by the US in this last election, specifically because COVID introduced an opportunity to digitize voting beyond what it had already done, given this ballot issue that had existed. And we can think of the ledger of cryptocurrency not only looking after assets in the way that we always used to think of them, but we can look at it, perhaps look at your voting right as an asset that could be governed through a token of some sort. Now, again, use case versus business case, but in the case of federal leadership elections, my sense is that having 100% immutability around a process which now has been cast a lot of doubt around as to its integrity, that was an opportunity that we had missed.
say that's the understatement of the 21st century so far.
Yeah. Yeah, totally.
So, guys, I'm conscious of time here, and Lee, I have to say, I'm sitting here thinking, and I haven't asked David or Willem this, so I apologize up front, but I'm sitting here thinking, what were we thinking trying to do a 1-hour webinar when we should be doing a half-day or full-day workshop? Because I mean, there's just so much and so many topics to talk about, and I'm actually struggling even with my 13 questions, and I haven't even got to all the other comments that everyone else has. I want to try and do some rapid fire questions here, and as in to try and just get through some of the topics that I think are relevant. So one question, David, you spoke to was DeFi and kind of decentralization. And I mean, one of the questions someone actually asked right up the top, and I'm going to tie the two together, did Migrate miss the boat because everyone is going to kind of the decentralization where they can go direct, excluding the middleman as a marketplace? And I want to be clear, I haven't preempted David for or against. I don't know what he's going to say. But it is it is interesting where you got kind of central marketplaces versus decentralized marketplaces. What are your thoughts on where the world's going?
So there are some components here that we haven't solved yet. And the most important is a provable identity that can be used as a basis for economic or even political transactions, even when it complements in a manner that is not too closely attached to your physical identity. The big danger of central bank digital currencies, the supposed regulator-friendly, nation-state-friendly alternative to more traditional digital currencies like Bitcoin, is that they can be controlled. But it is also their danger, because the freedom of speech of how you spend your money must not be tightly locked down. For example, in many countries in Europe, it is illegal to transact in cash above a certain amount, and it is a crime. Now, they say it is because they want to clamp down on tax evasion and the gray economy or the black economy, but they are ready to give up the fundamental freedom of economic association. Now, imagine if that were going down until it becomes illegal to use money that cannot be traced. So we have to resist that, and it is important to resist that. But until we solve the issue of a digital identity that is not strongly coupled to your physical identity, it cannot be addressed. In terms of marketplaces, I don't think that Migrate missed any boat. Migrate has the opportunity of driving a wave of innovation in what does it mean for not only itself, but many other companies in the same situation to thrive in an era of transformation. Yes, there will be a lot of different ways of structuring markets. Some of them will be very centralized, some of them will be completely decentralized, and everything in between. The slide that you showed about this rich ecosystem of components, I think is going in the right direction, where it is a meta marketplace. And inside that, Migrate has the opportunity of already starting to test. Some of them will be more decentralized, some of them will be more centralized, and then you learn from that experience in order to drive your own strategy.
Yeah. Willem, what's your take on it in terms of, and this was the slide, I'm just putting it up to show people what you were referring to there. Willem, what's your take on the whole, space and where it's going and kind of, again, I'm sort of putting you a little bit on the spot, and I'm not just talking real estate, because actually, you play more in the whole fintech space, and where do you see it going?
So Scott, one of the EXO attributes is leveraged assets. And I look at this marketplace strategy or this meta marketplace strategy, and I say to myself, you're not going to necessarily, as Wealth Migrate, try to be the one marketplace for everyone, for everything. You're going to have some niche areas that you're going to focus on where you have deep expertise. But the capability that you've built allows other players in the ecosystem to foster their own sub-ecosystems, do their own marketing, and apply their own niche and speciality skill sets towards developing those businesses. So this is going to be a twofold thing. There's going to be your own businesses that you run as marketplaces, but then also the marketplace business of running other people's marketplaces for them where they apply their skills and enthusiasm. Now, that is not a strategy of raising debt and buying as many as possible of your competitors to look big on a stock exchange. This is enabling organic growth of revenue. And we know that ecosystem play and partnership play is a theme that will, at least for the next 10 years, be around as regards successful businesses. So I don't think this is a missed opportunity at all. I think this is the start of it. I'll remind people that Uber was not the first ride-sharing service in the world. It was like the fourth. The first three just didn't get it right, but proved that the market could exist. And I think we're past the point of proving marketplace now, and now it's about execution and people rallying behind a purpose. And if I look at the Wealth Migrate purpose, which is to close the wealth gap, that is a global problem, which means that there's global sized opportunities that sit behind this. Elon Musk is putting satellites around the planet to enmesh the world in a communications capability so that every single person on the planet is connected digitally. They're going to buy their stuff on marketplaces. 3 billion more people are coming online to help solve problems and to spend their money somewhere. This is the opportunity of a lifetime, if you ask me, if you can execute with precision, following a purpose.
That is a fantastic example of a leapfrog opportunity that the continent of Africa has. The richest in materials, the richest in future potential in human talent that traditionally has been constrained. And I don't know, we could run a poll among our panel participants, how many of them are still on metered internet. Maybe it is not as much of a problem in South Africa, but how many African countries do not have the level of internet penetration that they deserve, and how many people are still using Facebook as if it were the entire internet because their countries are zero rating, are paying for Facebook, and everything else costs a lot of money in mobile connectivity. Imagine every village, every community having a satellite dish with a high bandwidth, low latency connection. What incredible number of ideas will come out of that? How many challenges are going to be solved, and how many people will interconnect, realizing that the things they are dreaming about are shared by hundreds or thousands or millions of other people, and create completely new opportunities. This is important. So many people see the economy as a finite quantity, and they are only thinking in terms of trading. If I gain, you lose. That's it. But basically, anything that is not a financial transaction, if is done, by definition, adds value to both parties. And that means that the more ideas turn into products and services, the more the economy grows. So when 500 million or a billion people in Africa are connected to the internet to come up with new products and new services to trade, to sell, to buy, to put online, that is not to the detriment of anyone. That is to the benefit of everyone, including themselves and the people in other continents.
Guys, I got three final questions, and I'm gonna kind of jump to them. So, if I was to ask both of you, and then I'll ask each one of you one question, what would you say is the most important element for a successful business and/or investing in the next decade? So either looking at the business component, and/or if someone is an entrepreneur running their own business, and/or if they're an investor, what do you think are the important components they should be looking for over the next decade? considering everything that you've already been discussing?
Scott, are we talking large corporations or are we talking startups or like? Because
So I think, sorry, I'm talking to the couple of hundred people that are online. So people running their own businesses. I'm talking adding value to the people who've given their time to be here. So in their investments, in their businesses, what do you think are your one or two takeaways that they should be focusing on over the next decade?
Willem, do you want to go?
No, please.
Leveraging new layers of abstraction. What does this mean? It means that artificial intelligence, Internet of Things, robots are not your enemy if you are able to pull yourself to a new layer of abstraction, take them for granted, integrate them into processes, make sure that humans and machines complement each other, and then take decisions understanding that complex system as it evolves. And the more short-sighted approach of fighting against it or trying to slow it down is a losing proposition for both individuals, communities, small businesses, large businesses, nation states. The Minister of Transportation in India declared that he will never want to make self-driving cars legal in India because the tuk-tuk drivers would lose their jobs. And not only that is impossible, but he doesn't think of the hundreds of thousands of Indians who are dying in car accidents. How inhumane can that be? How short-sighted that is. So moving to taking that in consideration. And the second component is back to the title of today's webinar. When we were studying 10 years ago and 12 years ago, exponential technologies at Singularity University, I asked myself, what are the implications? And I created Network Society and various investment theses around that. Today, I actually told Scott that I want to make available to him and his entire community, the people who are following us as well, the next phase of that kind of thinking that I am calling jolting technologies, where the rate of acceleration is increasing. That is what the title of Peter's book means. The future is coming faster than you think. And the CEO of NVIDIA, the chief architect of Intel, Elon Musk himself, are all on board with this kind of thinking, that a constant rate of innovation is not even enough anymore. Competitively, in order to reach our ambitious goals, in order to solve climate change, we have to increase the rate of innovation. So Scott and I will be riding that for sure. And with his help, I will be providing all of you tools to acquire that kind of mindset and then be able to act on that kind of mindset.
Brilliant. Thank you, David. And I want to come back. I've got one final question for you, but before I go there, I wanted to pivot back to Willem, and really from the investment space. Willem, you've been and heard me talking about some of the webinars and this whole concept of Society 5.0. You mentioned tonight, today, depending on where different people are, around purpose and how important it is with the Sustainable Development Goals, the United Nations, and really the whole idea behind an entrepreneur and the whole investment space. But what I was actually interested in was you were talking a little bit earlier around the whole kind of venture building and kind of partnerships. And I know David mentioned as well, where it's no longer about trying to be monopolistic. And I think it's quite a good one here. No, it's under a unicorn zebra, this one here. Whereas in the past, it was all about being the monopoly and competition and user acquisition. And now it's about sustainability, community, quality, collaboration, user success. I just wanted to kind of know your kind of thoughts on this, this concept that's come from the Japanese. And by the way, it's also driven by purpose and creating this better society for all.
So, big question. Answer won't fit into this webinar, but let me try to truncate. COVID's done a lot of harm to the world. No disrespect to anyone's life who it has touched negatively. But that change has brought about a whole new era where if you look at the fat margins and the lazy earnings that had been happening all over the world, a lot of that has now taken a gut shot. So the world is re-looking this thing of value versus growing price, such as to accrue more revenue. And in there is this notion of purpose. So I actually haven't seen this thing from the Japanese side. So thanks for putting this up, Scott. I'll definitely lead it. But look at the underlined red piece, for profit and for a cause. Now, I'm a big believer of this. Extech Institute, ironically, pre-COVID, tried to teach kids to look at problems as business opportunities as opposed to doing the typical human thing, which is to bitch about them. So if you have tools, you can do something about this. And if you have the right mindset, you can view it as an opportunity. And we try to infuse the capabilities of exponential technologies into kids who are still naive and still creative and still unconstrained by responsibilities like paying for medical aid and retirement funding, because they don't think about that yet, and apply those energies into problem solving. And what came out of that was fascinating worldwide. And in there, when directing towards some of these problems to solve, I think purpose has become a pronounced thing. I've said it already tonight. And actually, I can tell you this, in the fund that I run, there is a mandate for where we can put the money. And topmost of those, a list of things, it goes on for 3 pages, is the purpose of this organization clearly defined, and does it serve society at large at a scalable operating profit? Because if it's not for profit, it's a charity, and charities aren't sustainable. So this is a pronounced thing. It's not going away. If anything, it's going to garner more momentum. BlackRock, by the way, pulled funding out of all of their old assets like coal mines, because they believe that there are better ways of serving society through the use of technology, specifically in the energy space. And so imagine the coal mine CEO getting a letter from the BlackRock CEO saying, forthcoming funding halted. Why? Because your asset class is obsolete. That's a real thing.
One of the things that I keep saying is that unsustainability is unsustainable. And if you think about it from a business building and capital formation point of view, if you afford yourself to invest in businesses that do not understand this, then you are basically exposing yourself to medium and long-term defeat, where you have to pull out and then deploy again, rather than being able and build a legacy of ongoing wealth creation. Because a business that is unsustainable will by definition fail. And since the vast majority of risk is at the very beginning of creating a new business or making an investment, you assumed all that risk and then you squander it because it is destined to fail. Now, if your perspective, of course, is a question of a few months or maybe just a handful of years, then you can close your eyes and pretend that the future damage is not going to happen, except that smart investors are now pricing in that future damage. That is why, for example, Tesla is earning a lot of money selling carbon credits to companies who are not bright enough to invest in non-polluting cars and operate in markets where the regulators don't allow them to pollute. And FCA, Fiat Chrysler Automobiles, last quarter paid, I don't remember, something like $400 million to Tesla for the right to pollute. And Tesla was able to sell them their carbon credits. Isn't that wonderful? to have your competitor pay you in order to build even more of the cars that are going to kill them. So the investors in FCA are already suffering the consequences of the future pollution that the company finally is not even going to be able to do, because they are going to go out of business, because they are using the cash to give to Tesla rather than developing non-polluting cars. So investing in sustainable businesses will prove to be a vastly superior financial bet. It is not going to attract capital because of a feel-good attitude. BlackRock is not taking those decisions because they believe in good. They believe in superior returns, and they are acting on their belief. That is why they are investing in sustainability.
Last question, and I'm conscious of time here. So my very last question is one that has always fascinated me, and you know that it's close to my heart. And particularly with COVID, there's been a lot of talk about universal basic income. And David, you've spoken about universal basic worldwide wealth, and how that should work and everything else. And again, Willem, I'm not sure from your perspective, what your thoughts are. Let's start with you in terms of your thoughts with universal basic income, and then we'll move to David. And just by the way, I fully acknowledge that we haven't had time to go through artificial intelligence, AI, big data, digital marketing, but I'm conscious of your time. I mean, we're at the 90-minute mark, and equally everyone else's time that's online. So we're going to have to figure out how to do that in 2021.
Scott, so remember, my training is accounting and finance. So I'm going to fight myself in trying to answer this question, because the question of UBI, I think, has similarities to communism. And it's wonderful to spend other people's money until it runs out and divide things equally. We all own this cow together. I don't think that's the aim of UBI, though. I think that's slightly misconceived. The question that I have is, once you earn your universal basic income, are you going to pay universal basic tax also? And there are a series of structural things that come to mind that I'm not sure of how we're going to deal with this. And I think it's a little bit of my own little Gartner hype cycle, and I'm trying to fight some of my historical, retrospectively based training. So I'm probably not the best guy to answer this, because I've got conflicting views, and they put me in inertia.
And we do have a universal right to air, to breathe. We do have a universal right to take advantage of the ecological support system that developed over the course of 4 billion years on this planet. And we will realize how precious that is on our Martian colonies when none of that will be taken for granted. But we will go to create the Martian colonies equipped with 10,000 years of moral evolution that teach us how precious human talent is. And without going in any of the economic or financial analysis that would calculate when money will run out because we finish the ability of our computers to store the numbers that represent money, I want to just say one thing regarding universal basic income. Our acceptance of squandering human talent because people cannot afford to go to school, because people cannot afford to build the skills they need to thrive, because communities cannot build the resilience they deserve in order to be viable under an ever more complex climate or society, or our acceptance that AI and robots represent an opportunity of wealth creation that should not be concentrated in the hands of a few trillionaires, but should be a possession that is more widely spread in order to incentivize and to create a larger variety of solutions to the problems that we need. Well, this kind of acceptance will be seen as barbaric in the future, when we will just wake up and realize that the limits that we imagined didn't even exist. And we will have embraced a new way of thinking about how to build a society that gives a platform for everyone to thrive, which will not be at all like communism, Willem, don't worry. There will be still plenty of opportunity for differences to be expressed in a healthy manner, but it will be a society that embraces the rich tapestry of human potential, not with 8 billion people, with tens of billions of people, not only on Earth and Mars, but everywhere as we go with our robot and AI companions saturating the solar system.
Guys, I want to thank you. You know, if you want to find out more, both of them are very public, but the Jolting course is certainly something that I would highly recommend for people. I just wanted to finish. There's a couple of questions, and I just wanted to share very quickly. You know, someone said in terms of you know, Wealth Migrate has been talking about the Amazon of real estate for a long time, and I think what we've realized through amazing people like David and Willem and other team members that we've got is that actually there's the possibility to be the Amazon of personal wealth. And it all centers around the platform at the center that has already solved challenges and in terms of helping people invest internationally, whether it's in real estate or structured notes or other asset classes. And then whether it's institutions like Investec or another one of Willem's companies called OfferNet that actually, and by the way, David and Willem, you guys should be talking about this, where you've got digitized enterprises and digitized consumers and bring them together. And really for me, that's where the meta marketplace came in, because the more I understood this, the more I realized that you've got real estate in one space, you've got diversification in another space, a la Ray Dalio, you've got genres in another space, and then you've got community. And where we were is we were just Wealth Migrate. That was it. We had a platform in the center and we were a real estate marketplace. And then, you know, the Wealth University and the Wealth Movement. And what we realized was that over time we could bring out all these other marketplaces in, you know, and localized and specific. But really from a company perspective, you've got millennials, you've got women, you've even got Sharia compliant. But from a company perspective, what we're really focusing on is 3 global marketplaces in Wealth Create, Wealth Migrate, and Private Wealth. And everything else we'll be doing through collaboration with local people. So, you know, a group of fintech entrepreneurs that are specializing and you know, Lee's talking to someone at the moment around the women and wealth space. You know, no disrespect, but Willem, David, and I wouldn't be very good at running women and wealth, you know, to put it in perspective. But yet the central platform at the middle allows us to be able to achieve that. You know, we've built a pretty comprehensive team now, and I'm quite excited to say, and I don't know if I'm allowed to say it, but both Willem and David are actually part of this advisory team. And, you know, again, having worked closely with them both for the last 3 years, I'm really excited to say that we managed to get Willem even closer to us in the last week or so in terms of, you know, advising and working directly with the board. So watch the space. There's no announcements I'm allowed to say because Ken's online and Ken and Willem will kill me, but watch the space over the next couple of weeks. I'm not going to talk about the numbers and the transactions and everything. Suffice to say that really what we're trying to achieve and where we're going, you know, people can actually read all about it. We've got all the documentation, whether it's the financials or what they're looking at. And overall, it's so interesting, David, you spoke about micropayments. You know, really for us as a global wealth group, what we're looking to do is ultimately to do a minimum of 1 million transactions within a calendar year with an average transaction size of $2,000. Now that could be everything from $1 through to $1 million plus. It doesn't matter, but the average is 2,000. with an average fee of 5%, and that equates us to $100 million. And I think, you know, for the purposes of tonight, I'm not going to go into it in a huge amount of detail. There are exit strategies that we've got planned with timeframes. And really for us, we copied a model that Salesforce implemented back in 1999, where people could literally participate and be part of the company. And learning that from Salesforce was so incredible, and really something that Lee is going to be really driving going into 2021, is how to take a community-based company and take it to the next level. And I think that's something that we, you know, if we're honest with ourselves, have to some extent rested on our laurels. I think it's one of the greatest assets we've got, in the fact that we've got 863 investors from something like 42 or 43 different countries, and we've allowed people to completely participate by moving up the value chain and not waiting for an IPO. And you can read about it. We did it with Cedars. We do have, we're in consultation with two others at the moment. And really the opportunity for people, if they are interested, is that what we are offering is that we're doing a combined raise, both of debt and equity, $2 million in debt, $3 million in equity. And on the debt product, people can actually earn a 7 to 10% interest rate. Now, what we're doing this for is really to accelerate the whole business within an ecosystem, and really growing the whole venture building within the business. And I've already explained to you the model. The returns are based on the size, the payments are made quarterly. And what's important, I think, for investors is that it's secured against the group real estate assets. And then finally, with regards to COVID, what is really important is that a number of entrepreneurs and institutions, be they local or global, are looking for ways to add value to their niche markets, but ultimately be able to collaborate in a global exponential meta marketplace. And that's really what we are providing to people, and where we're going. And by the way, for both David and Willem, you know, this is something that, you know, we really have been working on and quite, you know, quietly for many years. I know, as an example, David, you're an investor in the Sun Exchange. We're talking with Abraham at the moment about literally putting his products onto our platform. So this is the type of collaboration that I just think is so exciting. You know, we've got people on our platform that have said, hey, what about having solar energy investments? Because that's the future and it's sustainable. And we don't have to be competitors. We can be collaborators, and it's really where the future's going. So, you know, that's what I mean by every target strategic acquisition, strategic partnership, strategic merger ultimately increases their revenue and profitability, and equally it grows the global wealth community and the digital technology infrastructure. And that's the synergy that one looks for. And so, you know, for us, this webinar series has come to an end, and all 7 webinars, I believe, are highly valuable to watch. And if you've got nothing else to do over your Christmas festive period, you know, Lee will be sending out a link to everyone. But for those that do want to participate, and it's not for everybody, it is by invite only, but you do need to you know, put yourself out there. Lee, if you wouldn't mind chucking up a poll. There are 3 different levels. You can get involved at a silver level, which is a $25,000 investment. It's a 7% interest rate and a 3% discount. At the gold level, it's a $100,000 investment, which is an 8% interest rate. And at a platinum level, it's $250,000, a 10% interest rate, and Class A shares. And again, just while Lee's got the poll up, you know, it converts within 5 years, and we look to ultimately provide the interest payments for people. The capital is protected against the real estate assets. And I think, you know, my numbers are actually a little bit outdated here, and I apologize. We've had just short of $1 million now in the bank. There's quite a lot in terms of actual contracts that are signed. We are looking, you know, for obvious reasons, based on everything you've heard David and Willem and the other experts and authorities that we've been interviewing over the last 2 months speak, is that we believe that we're sitting in a very unique opportunity, not just for us, I'm talking for all of us on this webinar, in terms of where the world is going. And yet if you sit there and just say, oh, this is a great idea, we should maybe get involved, or maybe we shouldn't, you need to be decisive and be able to take action in terms of, where the world is going. So, that is the whole reason of why we're allowing people and inviting people, to be able to participate. And if people want to know, what's the capital being used for? How's it being used? We've got the exact breakdown. All of it's in the financial modeling. And so really just in terms of next steps, and then I will look to close out because I am conscious of the time, is that you can go to the landing page. The link will be in the chat box, or if you're watching the recording, it'll be down below. I'd highly recommend to speak to one of our wealth consultants. Again, this is not for everybody. So come along and understand, what it is that you're actually looking to do. And if we understand your needs and we can see whether it's the right thing. If you already are bought into technology, go directly to the platform. I don't think David even to some extent has seen, we had Wealth Migrate, but now with the infrastructure, we've got, the wealth diversified marketplace. And it's just incredible what the tech team has built now, how we can roll out these marketplaces, either at a global macro level or at a micro level for companies, or speak directly with Lee on WhatsApp. Lee, just before I close out, and there's so many questions and everything else, but I wanted to get your insight into what to do next, because I'm very conscious of the fact that we are way over time, and also respecting our two guests, but equally feeling like I'm letting people down with all the questions and everything that people have asked.
Scott, to be honest, I think if we carried on with the questions, we would be heading into 2, 3, 4 webinar territory, because there are so many valuable questions that have come through. So my suggestion would be that we do call our webinar, and we actually invite our panelists back next year with targeted webinars on specific topics, and actually just dive a little bit deeper into the different aspects that we tried to cover and the questions that have come up.
So even though, Scott, you put me on the spot, I want to offer my availability. I think, for example, that artificial intelligence deserves a webinar on its own, both in its background and applications, but also in terms of how it can support Wealth Migrate in the coming years. And so I would suggest that could be a dedicated event as well.
No, thank you, David. I appreciate that. And, the one thing that I love about both of you is that you're very eloquent in sharing your knowledge, but you're also very kind in making it available to people. So, don't forget what David's doing with his jolting course. I know that Willem and Xtep Capital is equally out there and promoting, and maybe without getting their permission, maybe it's something we need to look at and maybe put a day aside where people can participate next year. But before we go there, and that would need to be decided on how we're going to do it. I know that Ken Williams was saying, and I can't remember who it was right now. Oh yes, it was Pedro, one of our wealth partners, has an awesome technology for running virtual conferences. So maybe we need to be speaking to him, and with OfferNet we can let the world know about it as well. So I'm going to close out for the evening, and for all of you that we didn't answer your questions, I do apologize. I want to leave just one final comment, closing comment from each of you, David, Willem, and Lee, and then I'll look to wrap up our entire 7-part series, which really has been quite a journey and so much information that we've shared. But final comments as we close out not only the 7-part series, but more importantly, 2020 is coming to an end. And your final comments to people as they sort of go into Christmas and what to expect as we go into 2021. David, do you want to go first? You're top on my screen.
Okay. Obviously, the defining feature of 2020 was the pandemic, and it is not going to disappear magically, even when the vaccine is going to be produced and then deployed. For many months, it is only going to be available in small quantities, and it will take probably the entire year until production can ramp up and we can start vaccinating in people in large amounts in order to achieve the necessary herd immunity. Anyone who says that herd immunity can be achieved without vaccination is a sadistic ignoramus. So please don't listen to them. Unfortunately, there are a lot of people who believe in as it is also a characteristic of our times, in superstition and conspiracy theories, because they don't have better tools to interpret the world. I believe part of our shared goal is to provide tools so that the people who are in our communities don't have to resort to that in order to preserve their sanity, or believe that they have preserved their sanity. And the consequence is that in many countries, there will be a strong movement against the vaccine. And that will be a tragedy, because it will delay returning to a world that allows physical meetings and economic thriving. So it is not going to be 2021 yet, but probably 2022 will see a huge rebound. It will really see a huge economic, social, and psychological rebound. But in the meantime, if we want to be realistic, we have to just keep going, because this is not over yet.
Awesome. Thank you, David. Willem, to yourself.
I agree with that. This is not hang out until December, and then in the new year we should have a quarter before we get the vaccine. In fact, my estimates are that it will probably take a little bit longer, given the political interference that, specifically in dictatorship type jurisdictions, we're seeing in some lighter and in some heavier formats. I will say this: the great financial crisis had also a whole series of changes that were ushered in on the back of it. And for a period of time, there was tumultuousness in the markets. And depending on the mind frame that leadership and organizations had to either hunker down and try to save themselves into survival, or others that went out and said, let's embrace the new changes and try to capitalize on them as quickly as possible, those two broad paradigms had very different outcomes in market capitalization in the subsequent 24 months. Those that tried to adopt, learn, yes, make mistakes, but play in the new field, on average, had something like 8 times more market cap than competitors that perhaps were even bigger than them before the crisis. So with that sort of backdrop, I would say, try to survive during the remainder of COVID, such that you're able to thrive subsequent to COVID. There is huge opportunity when change is afoot. And I don't think the world has seen many changes in the past of the quantum of this particular set of changes. And mind frame is absolutely paramount in how you embrace or try to defend against this order that's now been ushered onto us. And so stay healthily minded around opportunity and positivity would be my advice.
Excellent. Thank you, Willem. Lee, your closing thoughts.
This journey of the last 7 webinars that we have been on has been an absolute explosion of information. It is the only way that I can see it and say it. It has been just so mindful and so well crafted, from all our panelists that joined us throughout it to ending with this one. And this is a mighty fine one to end with. Lots of food for thought. Throughout COVID, as many of you know, I was separated from my family for 7.5 months of COVID. And what it taught me was resilience, not only for myself, but for every aspect of life. And the personal growth that happened was really, really heartening. I've seen it with so many people. So in the depths of despair, with everything where it comes from the markets and everything that you're looking at, there has been so much growth, worldwide growth, in what we can achieve and where we are going, and technologies and processes that have taken leaps and bounds forward by COVID. So it isn't all doom and gloom. Unfortunately, I concur with my fellow panelists that it is here to stay for a while, that there is no magic fix right now, but the world is working towards one. So as we end off 2020 and start looking towards 2021, let's find the positiveness in all of it and remember that the world is growing and moving forward, as should we.
Awesome, Lee. Thank you very much. And I want to just give everyone some closing comments from my perspective. You know, we always say, why do people partner with us? And I tend to say there's always three reasons. One is that they want to make a profit, they're human. Two is they want to be part of a global community. And I think this whole thing that we've been on, this whole journey is about, you know, growing that global community. And then ultimately that purpose, and I'm going to get into trouble here because that's been updated. We help close the wealth gap. Willem's helped us tighten that up even further. But you know, what I think is important is that I want to share just these slides, you know, that are very personal to us really. And you know, that's my son at the age of 5 playing Monopoly, and he's learned that many, you know, to earn passive income from different assets is what we call smart investing. The team has now allowed people to use technology to invest in different asset classes around the world, real estate and others, and to be globally diversified. And it's what we call smart investing. The wealthiest people in the world, they focus on generational wealth. And, you know, for us, our purpose and is to help close the wealth gap. And we do that by helping put smart investing in every single person's pocket. And so, you know, the whole concept of we've got a smart watch, we've got a smart TV, we've got a, you know, even a smart car. And these 7 webinars have been to make you smart, because as an investor, if you don't invest in yourself first, then everything else is paramount. And so I hope that you've enjoyed these 7 webinars. I really wanted to thank Willem and David for your time. It's really appreciated. Lee, to you and your whole team, you've run this amazingly professionally, and really I'm so grateful for everything that you've all done. And then to, you know, the people that want to participate, and there's been many of you, these are the final links if you want to go out and connect with us. As I said, it's not for everybody, but if what you've heard tonight resonates with you, if you resonate with our purpose and you want to be, you know, welcome on our journey, then, you know, this was an invitation for you to join us. And really, I think, Lee, there's nothing more to say other than thank you to all. Have a wonderful end to your 2020. And as the panelists have said, this is not the end. This is only the beginning. And we want to invite you on that journey. So come walk with us and let's create the future we want to see. Good night and thank you.
Thanks, Scott. Thanks, Lee.
Thanks very much, Scott. Just a shout out to you as well for your constant energy and participation in these 7 webinars. You always joke that I tell you when you have to appear on the mat, but you really do bring your A game, and we really do appreciate it. To our community, you have been fabulous as we have walked this journey, and we look forward to getting everyone together again in the new year. But wherever you are in the world, we hope that you are surrounded by love. Take care of yourself, stay healthy, and be blessed. Good night, everybody.
Cheers, man.